Okay, this is a full budgeted financial report. So, and it looks big and it is big, but they're a lot of fun. I've tried to make this so it's very plug and chug and you can put the numbers together and understand where they come from. So we're going to start with this cash budget. And this says our beginning balance is 50,000. That's a given. And the numbers and the information are down here, right here at the bottom, in this location, and in this location, and there. So we have 50,000. Our receipts are 20% times 1.72, and so you just multiply those out. So our total cash available is 1,414,000. Now we're going to do the disbursements, just like we did in the other one. And in this one, we show our disbursements, what they are. We show what our salaries are, and these are given down here at the bottom. We show other expenses. We show the accrued expenses, the interest. So this is our total cash disbursements. Now I want to know what my ending balance is. So I'm going to take the available and subtract the disbursements and come up with 122,400. Now that is going to be automatically plugged over here, and I do that right now. Put it in there so that you've got that taken care of. You're going to use some of these other numbers too. Now we're going to look at the budgeted income statement. Gives us the sales of 1.4 million. Our cost of goods sold is 55% of that. So I guess I'm going to have to make these go away. So now I have cost of goods sold at 55% at 770,000. We have our operating expenses, and salaries are by cash paid. So we paid out 275. We had a beginning payable of 50. So we're going to subtract that, and we're going to add the ending payable. And we come up with 285,000 paid for this month's salaries. Now we have to look at depreciation, and that's found right here. It's 36,000. Other cash expenditures was 200,000, as you remember from right here. And we had a bank loan interest right here that cost us. That's 6,600. So we had total expenses, including the 770 of 527,000. Our income before taxes is 102,400, and our tax expense is 30%, so that's 30,720, and we have a net income of 71,680. We probably need to net this over here so you don't get confused. I thought I had netted it, but I didn't. Sorry about that. So this becomes our gross, and from that we subtract the total expenses right here. So now I have net income, and we're happy. So this can all go over here out of the way for now, until I have to move it again, right? And now we're ready for our balance sheet. So, and I try to give you as much information as I can. So we have our accounts receivable, and in June was 20% of 120. Or 1,200,000, plus July is 70% of 1,400,000. So you add those together and come up with 1.22 million in accounts receivable. Inventory, beginning inventory right here. We want the ending inventory of 60,000. So we now have current assets of 1,402,400. And now we have to look at the equipment, because that's listed. Equipment was listed at 1,006,000. We already had accumulated depreciation of 280,000, but we have to add the new from up here. of $36,000, so that comes to $316,000 in accumulated depreciation, or a net of $1,284,000. Just kind of get that out of there. That gives us total assets of $2,686,400. Now we're going to hope, okay, that our liabilities and equity meet that. So let's see what we've got. I have accounts payable, and I lay it out here, 40% of the $750. Our salaries payable were $60,000, and that was right here. Our income taxes payable was $30,720, and that came from the income statement right here. So we had current liabilities of $390,720. I had a bank loan payable of $660,000. So now I have total liabilities of $1,050,720. I had common stock right here of $600,000, and I had retained earnings. And how I'm going to do that is I take my beginning retained earnings right here. I add that net income, and I come up with $1,035,680 for my retained earnings. If I add these two together and add this to the long-term, or to the liabilities, I come up with $268,400, which matches here. So that would be how you set up and use, you can actually create a full set of financials just to kind of forecast how the company may do in the future, and you could use this for a loan or whatever you might want to do. So now again, in the homework we're going to do one that's all tied together that does this. So are you ready for that?